Hello everybody, this is Bulldozer Investing. It is February 10th, 2021, 4:10 p.m. US Eastern Time. We had a crazy day today, ups and downs. I'd like to discuss that. Before we go any further, if you do check the video description on the YouTube channel, so if you go to the YouTube video on youtube.com and click on the video description, it'll expand and you'll be able to click on the bookmarked timings depending on which ticker you like to see. So that's also helpful. So if you're watching it on a platform like Twitter, Stock Tweets, and any other platforms, I highly suggest to go to the YouTube website itself and click on the video description to jump back and forth between some of the tickers that you might have interest into. Okay. And the second request I like to make, and if you please do that, this would be awesome. I know most of us have Twitter account. If not, you could create one. If you can request the tickers through Twitter, and I always pin that day, so it might come, around noontime, it might come early in the morning, but watch for that tweet of, request, ticker request. So I always open up a I always open up a thread and say, go ahead and request only one ticker for that day to be reviewed after market hours. Okay. So those are the two things. If you can please not request anything from the YouTube comment, because it's very hard for me to go on different platforms and take requests. I rather just collect it all through the a thread that I open through Twitter. Having said that, so let's go ahead and start. We have a total of 29 tickers to review today, and I want to finish as fast as possible. So our first ticker is going to be obviously VIX, and we always do that in the beginning of the video sessions. Now zooming into VIX, and it's very interesting that it hit and it went down. Remember, I was watching this 20 level, this line that I drew, the $20 range, went underneath it. As soon as it went underneath it, it went back right above and hit the 20-day, 50-day moving average on the daily, and it finished the candle right in the middle. So this tells you that that I've been saying that VIX is going to wave up and down, and that was the range I was expecting, basically the 20 range and the 24 range, and it'd go up and down until it's ready. Markets are going to be shaky, like I said yesterday. Expect the markets to go -1 and go bizarre all of a sudden, and then you see the market going back up another 1% the next day. This is just expected. Volatility is expected. When you reach tops like this and you gap open like 1-2% every day, of course you're going to have corrections. And even a -2% day should be healthy for the market, actually. Okay? So that's VIX. Nothing has changed. You can get these waves off of 2025. That's totally normal. I believe the major resistance for VIX is going to be between 2474 to 2542. And if you want me to look at it under an hour chart, the hourly chart, however, it looks like it's about to explode and it's bullish. You see this trend right here. Let's go ahead and draw the line. It's forming a bottom on the hourly. You could draw something like this, okay? So the next wave up is going to be 2380s, and it's probably going to touch the cloud and come back and struggle. Again, it might hit. And on the hourly, that's funny enough that we don't see that spike down under the 20. So I don't know what it is. It might be my platform that when I zoom in, I don't see the prices that I see on the daily wick, or like vice versa. So if you look at the daily, for some reason, on the daily, I see that quick spike, and VIX going back down to 19.77. So that's VIX. Again, expect volatility, but VIX is not going to spike up. It looks like on the hourly it looks bullish, but that's the area that I was talking about, like 2484, 2532. If VIX hits that, I'd probably buy calls on SPY, because I'm expecting it to go down around 2221 area. Okay, but it is, again, VIX was forming this rounding bottom. I think the rounding bottom is now expanding. Okay, next up is SPY. Well, everybody is wondering about SPY right now because of the volatility and the moves that we've seen during the day, and it was kind of crazy. Well, yeah, the SPY, just like Russell, which Russell had like moved above its upper trend line, it tried, but it got rejected. But we've seen the all-time highs. Remember previously that our level of rejection was 392 before on I think I don't know when back did we do this. Let me take a look if this was the extension that we drew. No, I forgot which extension I drew it in, but that extension I deleted it, but it was 392. These are the levels to watch. Again, it's not a market top. I was actually expecting the market to go all the way down to 383 and in fact 381, which would be healthy. Now it'll cause people to freak out because they don't adjust their cash portion appropriately to average down, and they're on margin and they're like freaking out. They think the markets are going to go up forever. No, it's you're going to go down and you're going to go up. You're going to go down, you're going to go up. And if you look at the monthly chart of SPY, and eventually you're going to go up on a long-term trend. Okay. So you see this cloud bounce and the cloud bottom bounce on the Feb crash. So these are some obvious things, and if you look at the monthly chart, that it's a very rare scenario that the markets ever, on the monthly chart ever go down below 50% or 50-day moving average, which we did on that crash, but then recovered at the 100-day moving average. So if you know the moving day averages, and if you knew it, that's where you position on the crashes, but that's fine. So if in case the worst case scenario, if SPY crashes, we've drawn this box and the 50-day moving average is 287, and that's where you expect the market to crash. I'd say the major supports, you see the 9-day moving average, major supports, the 20-day moving average. So you look at it and you estimate, and that's how you save money on the side and say, in case the market goes to this level, that level, I'll be ready. So you see these yellow boxes. Honestly, I've never done monthly chart on the videos when I've drawn these, right? You notice how the yellow boxes coincidentally end up being on these moving day averages. So I expect a big correction of SPY to go down as much as 349, 350 if that comes, which is again healthy, okay? Because you need these setbacks to bounce even harder. Now in February, and remember, each candle is a month, by the way. So remember that when SPY hit the 20-day moving average on the monthly, it bounced back, it went above the 9-day, and then bam, it crashed, and the 100-day was the bounce, okay? So in the cloud top on the next month was the support. Over here, when we look at the monthly chart, it is extended. It is, there's nothing that we can say about this chart and say, okay, we don't expect a correction. Yeah, we always do, okay? You always expect a market correction when the market is this extended. But how far is the correction? I would say a healthy correction would be, or healthy correction would be 349, and healthy pullback will be 381. Okay, so those are the levels. Now, if you have heavily invested into the stocks, you want to go ahead and make sure that you have some securities on the side as a protection. You can buy long dated 350 puts or something to protect yourself as an insurance. Again, it's not a trading advice, but I'm just saying, like, technically this is what a trader should do. If you're heavily invested, if you have 100K on the market and you at least want to do 1 or 2% insurance for the downside, because it could save you, okay? So it's just like buying a car. You buy an expensive car, you have to have an insurance. You have a cheap car, like $2,000, no offense. I mean, I'd rather drive a cheap car and save money than buy a $100,000 car, and only thing it does is just getting devaluated, and it's just it's a liability instead of an asset. So all things aside, you know, I suggest, you know, if you're going to buy a car, it should be 10% of your income salary. So if you're, you know, making $100,000 a year, you should buy a car for $10,000. That's what, you know, makes sense. So anyhow, you know, that's what you want to do. You want to have $100,000 in the market. You should have 2,000 as a protection on puts or whatever UVXY, whatever, right? So that's how the market works. So either way, then, you know, you sleep safe. You buy an expensive house, you have a security system. You buy an expensive car, you have an insurance. You buy a cheap car, you still have an insurance because it's what the law tells you to do. But then you go ahead and buy, you know, um, what do you call those insurances when you have single liability, like you only cover the other person on the accident, but your car is at a loss, that's fine, type of thing. So that's what it is, you know, you only invested $5,000 in the market, you're like, you know, who gives a heck, you know, I can lose 5,000, markets are not going to crash, so I don't care. So you don't need an insurance, but you have over 100K, 50K, 100K, 200, 1 million, so you better have an insurance on the side, okay? That's also, if you're looking for a downside, I'd say that 384 on the daily, or maximum downside of a healthy pullback would be 381. Again, when we go up 22 points, nobody says anything, but when we come down like 3 points, everybody freaks out and takes the exit doors. That's not how the market works. Okay. Next up is QQQ. I'm going to go faster on the next couple things because a lot of people expected me to, you know, talk about the downside, what would happen, what should we do. So I covered all that. Then the next tickers, I'm just going to go really fast. QQQ, again, managed to close right on that fib level, which is really healthy. I know that the candle looks red, but I believe the closing on right above, so 332.75, 332.53, right above that fib level is very healthy, and I was expecting the QQQ to touch 327, 328 area, which would have been really healthy as well. If in case we pull back even harder, watch out for 325 level. That would be the case where you would, you know, expect the pullback to go to. And if you want the um, most downside, I'd say the 61.8. Again, that's 325 level, maybe 323 level. Okay, that's QQQ. On the upside of things, I believe the QQQ will eventually hit 344. Okay. If you rather invest into a leverage one, I'm just going to mention, I'm not going to put this in the list, but FNGU is a beast. Holy crap. Like, I told one of my friends to get this at 25 bucks. It's cheap. Watch out for the ask and bid prices because it's, you know, the volume is weak, but holy moly, guys, from $25 to 421. Okay. This is kind of like QQQ on steroids. It has all these like Teslas and Rokus and Twitter, whatever, right? All your hype tech stocks. So now that it hit the so this is what's scary. Now that it hit the pitchfork upper channel, this could come back down with 374, and I would buy with both hands if it manages to touch the cloud with $300. And not short enough, like not long ago, which is end of January, it was only 300 280s. Now it's 421. This thing is on steroids, okay? You see the market crashing, you know, Nasdaq crashing, and you think it's going to turn around. Instead of buying QQQs, I'd rather buy this. It's crazy how it, you know, corrects itself, and anytime it touches the cloud, it's just crazy. Um, it's crazy in the beginning when I found the stock and nobody even knew about this. When I told my friends, they're like, "What the heck is FNGU?" Um, so I'm like, "Well, you buy it and you see it. It's Bank of Montreal. It's their FANG index. It's 3 times leveraged, but you know, the friend that I'm kind of sad that the friend that I told him to buy at 25, I told him to sell at 75. Um, and he's like, now if I kept it, you know, he would have been like, I don't know how much, but at least 400K, 500K at that point. But when it drops hard because it's 3 times leverage. But when you get an opportunity, you ride long. You know, since November, It was 170, now it's 421. That's crazy. It performs better than the leverage QQQ. Okay, SQQ I think, right? That's SQQ is bullish. Keep getting them mixed. No, that's the short. I'm sorry. I meant the TQQQ is the bullish side. So it performs better. This went from 16 to 100. The other one went from like 23 to 471. So you do the math. All right, coming back to our tickers, it's next up is Russell. Let's go ahead and zoom in. If I do this and just go like that, I hate TOS giving me this time axis like crazy. I don't even know why it does that. Okay. Now again, everything is healthy, guys. We just only thing we did is we retested the fib level and we bounced back. We've closed it above. That's good. You know, nothing internally is damaged. Again, I don't want to pump it up or anything. Like if you're a value investor, if you're not a chaser and you want the market to come to you, which I think that's how the market should be played, you want to get in. So if you're in cash, I'd get in the market when, you know, these Russell index hits like 213, 212, okay? Maybe maybe the 100% fib line at 218. That 9-day moving average, okay? So if it breaks below, then you want to get out. You don't want to test, like it needs to hold the 61.8 and 50 levels, which is 213 to 211, 212 ballpark. If it breaks below that, I think it's bearish and you want to watch out and, you know, get in at 50-day moving average or the cloud top. Now, anything we you know tend to close above this orange line and we can extend all the way to 240, okay? 239.36 to be exact. Next up is Apple. Again, nothing changed in Apple, nothing that I, you know, changed my view since yesterday. All Apple is doing is hovering over this price range of, you know, 133 to 138. We mentioned before that this 138 level is very critical and psychological for the stock. It needs to, and it didn't kind of test it yet, but it needs to hold this yellow box. Maybe it'll fill the gap around, you know, 132s, or maybe it'll touch the cloud. I'm not expecting big on any of the large caps. As you see, the small caps, the marijuana sector is going nuts. Sundial, SNDL went nuts today and yesterday and then last Friday. So why would anybody bother with Apple at this point? I don't know. I think the market is just squeezing the juice, getting every single, you know, profit as they can from all these small, you know, popular names, and then they're gonna drive back to. So they're not letting Apple drop, but they're, you know, couple, you know, 2-3% is nothing to them when they can gain 77% on, you know, all these hot names, and then they'll come back and run these names. So the big sector is not ready yet. They're juicing, they're, you know, milking all these small names. Once they flush them out, they'll come back to these value names, but it's not the time yet. Okay. But it's protecting itself. It's not bad. It's just that I think it's just gonna chill here for a couple weeks. Okay. Next up is ASTI. Ascent Solar. So these are solars. Again, any of these names that you guys give me, solars, marijuana stock, is obviously a penny stock. It's very hard to do technicals on penny stocks. Do they go technical? Yeah, but then they're also very open and vulnerable to groups and pump and dump schemes. And that's the hardest part, you know. Technicals will get damaged immediately when people are controlling the stock. So that's what you want to watch out for if you're in the forums, or if you don't like, I mean, like Zach Morris has his, you know, Discord. He's well known, right? But then there's like all these other people that start their Discord and they get in these names way before, and you can see these things on, you know, Bitcoins and altcoins, that they get in these penny stocks, like they put like $100,000, and it's okay. They'll wait for a month and then they'll pump it, and you'll buy the pump while they're selling it to you. So watch out for those type of people. But then there's also reputable people, like I've mentioned Zach Morris and other people who have Discord, that they, prove themselves. So you want to watch out for what you're getting into. But as far as this extension goes, it's pretty much where it is. Like I didn't just make it up, right? I picked the extension and pretty much hit where it's supposed to hit. Um, I don't like to chase these names. I don't want to give them a bad rep, but um, when I miss something, I don't want to force myself to buy it because I've had a bad taste where when I did that type of trading where I'm like, oh, it's flying, oh, I missed it, and then I get in and then I pick the top and then the stock never comes back there and you're selling at like 50% loss. Of course, the chart looks bullish. Of course, there's nothing wrong with it. Besides the fact that this thing is a penny stock, it's a solar sector, one that goes up just like marijuana, Tilray went up to 150 yet and still $60 was, is amusing everybody that it went up from 70 to 60, but that thing was $150 at once and then it only took like 3 days to crash down. So you got to know when the music stops and you don't want to be the one left without the chair. That's all I got to say with these types of names. Sure, it can go another 100%, 200%, but it's not an investment, it's trading. Are you the trader that, you know, could get out and come in and come out and pull that money out? Are you experienced enough to follow up the, level two, the volumes, the daily motions when they get out, are you able to realize if institutional or groups are controlling the stock and that kind of a thing? So you just watch out, We had an example of GameStop, so you don't want to live that through again. Okay. Next up is BNGO. So BNGO, again, I mentioned yesterday, nothing have changed since yesterday. Guys, it's okay for us to have, and I mentioned this, right? Yeah, the internals doesn't look good on the daily, but the stochastics is still reviving. Just wait and hold on, guys. Look at this strong name. I mean, I don't care about the technicals investing in such a company. Their machine is a beast. Just go ahead and research their machine and look how the lows hold, right? Look how the lows hold. Okay. So look at this body, the opening of this body, right? The lowest on that green day. Look at the lows. Look at the lows. Look at the lows. Look at the lows. This thing is a beast. It went close above the 9-day moving average. My concern would be that if we lose 10, 20. Okay. Now a couple cents underneath it, that's fine, but it's a pennant. It's about to do its thing. I wouldn't be worried about like these types of days, and it recovered. I mean, like 3.5% is nothing. This thing can go up 30% the next day, right? I remember when I picked this name at seven something, right? It went from $9 and dropped down to 7, and everybody freaked out. It's like, heck, I'm buying it. And then bam, from 770 all the way to 14. So don't let the price freak you out or the percentage of drops. If you trust in the company, I'm not pumping this company, right? I don't own a single share of this company. I don't own, or any of my relatives own anything about this company. And all I'm saying is if you have a company that their science is good, their product is good, and they're just in the beginning of things, okay? Just look at the weekly chart. Okay. Stock was, let me see if I can go back 5 weeks or something, or 5 years on the weekly. Yeah, the stock is a new stock. Stock is only since last October. What is this? If I can get the exact date, 2018 actually. So from 2018, its product is just finalized and they were at 25 cents. They were penny stock at once. Now they're picking up. This thing has a long way to go. It's a new company. You can see the volumes like right in the beginning of 2000, they don't have any volume, right? But the thing is, look, the volume has been tremendous on this upside, right? That's institutional, okay? That's institutional. We're only in the beginning of this stock. If you want to buy and hold, that's fine. But if you want to watch this name every day, that means you invested too much. That means you risked too much. Buy enough, don't get worried, and just don't look at it, okay? So next up is BOXL, Boxlight Corporation. Chart looks bullish. even on today's drop, okay, 9-day moving average, we don't even touch it. It went and then picked up through the day. Closed the day positive. I'm not sure why the candle looks red, because of the opening price maybe. But again, it closed the day fine. So not worried yet. I believe this rounding bottom is so sweet. And I always say this, a lot of people ask me, what do you look for? What do you look for when you're charting, or when you're picking things? Okay, this is what I'm looking for. A well-established rounding bottom. Okay, and if we were to break above this, it's probably going to do a cup and handle, this sort of thing. But again, I need to research the company a little bit more. I'm sorry, like some of the companies I just don't know. I need to study back and learn these names a little bit. But this is a long hold name and it's cheap right now. I'm going to look at the weekly price for it, but I love this rounding bottom. Now, sometimes, you invest little and you add until it drops and curves and does the cup and explodes. Okay, look at this. Okay, look at this. From 90 cents to almost $5, $4.65. This thing can move on news, and this volume is telling me, yeah, right? There's some, okay, this pullback is there, but the pullback is not, the volume, sell volume is rarely existent. So, and as you can see on the weekly, this is the sweetest thing you can do, is be under the cloud for many years and then manage to break out. So as you can see, when I say it's only the beginning for some stocks, you're gonna have to expect a huge run with these names. Now, again, what I suggest is, and especially these days when the market is so high and everybody's freaked out about, market crash, market correction, you buy enough that would have you sleep well. Buy enough so that you can sleep well and don't have to worry. And then at the same time, make enough money that would make you happy. Okay. Now, these are the levels that I look for. And if you want to, take this to the next level, and you want to take the high of the highest point and just do a fib. There you go. You can go to $8 to $10 depending on this high and the low, right? But what I look for, and I'm always conservative with things, I don't like to, give high price targets, is I'm going to go to daily and say that it is reasonable for this stock to hit 337 to 384. And then it's expected a little pullback, that cup and handle I was talking about, but collect slowly, accumulate slowly. That's what your target should be. But the chart looks bullish, especially on the weekly, but the volume isn't there. I don't know if it's like a liquid stock, but sure, the price is cheap. You can always accumulate when you have the money. Next up is CRBP. Corbis Pharma's Holdings. Okay. So yeah, this chart also looks bullish that it broke the cloud. Okay. It can have an advantage of filling the gap, and it can go all the way to this cloud top right here at 538. That would be conservative, and it could go up to $6.24. Just eyeballing this gap. Again, I don't know what the drop was about, and it looks like companies having their earnings on 11th. I don't know, these kinds of stocks, I don't really think they're earnings plays. They're just, news plays, anything with FDA approval and so forth. Now let's take a look at the weekly. The weekly, it can go all the way up to the 20-day moving 50-day moving average, which is sitting at 432, and also the 100-day moving average at 517. You get the weekly MACD crossover. Everything is bullish. A nice volume kicking in. Today had a very nice day, 10% and well beyond after hours at 379. So yeah, only thing that I'd watch is this level right here. Let me draw a price level. So right here would be, well, actually this is where we at. Okay, 358, which broke above. Now this is telling me the next level is going to be 434. Seeing the after hours at 379, I think it's going to go through 436 and then 517. This cloud top is going to be your resistance. Even surprised that this level right here is broken above. So company has probably gotten some good news recently. Every single sign that I see here is indicating that this chart is bullish. And I can do is I can't draw an extension, but I can do a fib regression right here and 527. So if this level holds, that, you know, what is this, 360s? If 360 holds, your next target, which I said the cloud top. So sometimes, you know, I don't really have to spend, like, I'm spending an hour. Honestly, I can just look at a chart and tell you, but I want people to learn. First thing I look at is this, right? First, you have a wall here on this cloud. It's called the Ichimoku cloud. So if you just concentrate on the cloud and don't look at the price, so don't look at the candles, first thing I see is here. That's your resistance. And the second resistance is right here, which is 366. After that, you don't have any resistance until where the fib and the cloud meets at 527. Okay. And that gap fill, when we said 630, that's what the 61.8 retracement, I said regression, I'm sorry, I meant to say fib retracement, is at 630. So anything, I didn't have to draw a fib extension. I didn't have to look at the cloud. Things are obvious, you know, you're going to fill the gap. You're going to hit this area right here. So that area indicates that, you know, 650s, but the fib says 630, so 20 cents off. Okay. That's how you look at a chart. Sometimes, you know, you look to see, oh, there's a huge gap. Okay. Where gap fill resistance will be right around here, which is at 628, 630. That's all. Okay. And then if you know the cloud, you look at some flat lines, which is right here at 345. Next level is 369. Until then, the first level you're looking at, you know, 525, 527. So yeah, the chart looks bullish. Everything looks bullish. Only thing is the resistance of 359, 360, and it seems like the chart is just exploding. Or the price, you know, look at the after hours on a minute chart. Seems like the chart is on a move at, it was just, why is it not showing after hours? Give me a second, guys. I thought I just turned this on yesterday. Okay. Yeah, there you go. So the chart looks obviously exploded on after hours. So this is at 4 o'clock right here. You get that, you know, slow meltdown, and then bam. Okay. So outrageous breakout. So there you go. So the chart looks bullish even on, you know, hourly, anything, you know, this is what I was talking about. It has to hold this line right here. So if you manage to stay above this level, then you're looking at 527 next level. Okay. Good pick, by the way. All right. Next up is CrowdStrike. So CRWD. I've used their products. I've told you I'm in the tech sector. I use CrowdStrike. I used, you know, all the other products out there. But I love the chart. Okay, nice pick. Especially today after Biden said that we need to take care, you know, we need to focus on, you know, we need to focus on cybersecurity to compete with China and so forth. So when Biden says these, media, CNN, I wonder if they're mocking him. I want, because when Trump said China, everybody was against him. But when Biden says this, I don't know what, you know, if anybody's rejecting him or anything. Just to tell you, like, you know, I'm not on neither one of their sides, but it's just amazing how the story can change when the media wants to change it. Double bottom, okay, and beautiful break out of the resistance. And this is a very bullish chart. I'm going to go ahead and delete this fib. I don't know. It's pretty correct, actually. I shouldn't delete it. Let me just do a new extension. The 61.8, you see how accurate these extensions are? You just have to pick the right spots, right? You see how the 61.8 was in resistance before it was the 50% or the 161 fib. So these are both accurate. and then all of a sudden the bounce back to 61.8 three times. Even today, look how close it got. Okay, so this extension is pretty accurate. I'll say that your next level is 236, and I'm expecting the stock to hit anywhere in this range. That's why I like to draw these box widths depending on two different extensions. Okay, and they're both accurate too. So you're expecting 262 to 277. Everything about this chart is bullish, including your MACD crossover. About in this, the move is just starting, by the way. Stochastics ready, and RSI is going into the territory of 6270, so that's pretty good. Let's do an auto zoom. Yeah, so you see double bottom. This is very nice. It broke out of this resistance right here. 236 would be your next resistance, and my goal would be 262.98, which is 263 to 277. Extremely bullish chart. I love this long flag. If you do want me to do the flag theory, I can say this, right? I can do this, and then just grab this. I'm sorry, 1 second. Clicking on the wrong thing. There you go. This thing, yeah, this thing can easily hit above 300. This is a long behold name. You just buy and forget it type of thing, especially the environment we're in with cybersecurity. Nice name, okay? I just gave you the targets. Conservatively, I could have easily said 300, but conservatively, just look for this range 263 to 277, okay? Next up is CVX. I believe it's Chevron. Yeah, it's Chevron. This is bullish. I don't know what it is. The EV sector is now like going down a bit. I mean, Neo's chart looked really strong, but you're looking at this. Okay, so if you want to judge this chart, and you don't have to ask me this every. No, I mean, don't. I mean, you can ask me any name you like. Don't get me wrong. It's just that I'm more excited to go over new names every day than just keep on covering the same names every day. It gets a little boring, but I'm going to show you two things, okay? Let's take a picture of this. So I just want to show you the smaller time frame. You're looking at the first bottom, the second bottom. So you can draw this extension from here, touch it here, and touch it here. The breakout confirmation is clearly right here, this yellow top line. So if we touch, we can easily bounce back to the cloud top and then go up. The higher lows is pretty good. It looks like a pennant, descending triangle, or ascending triangle. I think this is it. This is called the ascending triangle. So ascending triangle is pretty much the flat top and the higher lows, and then it breaks out. Whereas the descending triangle is like this, and then you bounce down and then it breaks down. So let's go ahead and draw our extension on the shorter time frame, and then we'll zoom out to see what's going on in the longer time frame, and we'll look at the internals as well. Okay, perfect. So sometimes, you can call me lucky. Please don't think I'm smart. Only thing I'm doing is connecting three different spots and giving you targets, right? Beautiful bounce off of the 20-day moving average. And then right when we get right to the 61.8 at 92.67, a little bit below, that's fine. I think I need to correct. I need to correct couples. So there you go. So that was kind of, I need to touch. Maybe I wasn't accurate enough, so I need to make sure that the lows and the highs match. But anyways, you get the point. Couple cents here and there is fine. So as you can see, we got us support at 50%. Now we're at 61.8 Fibonacci level. It might retest the cloud top, which is sitting at 91.19. But if you were to buy this, I mean, lot of people thought oil will never come back, but $51 for Chevron, it was an amazing deal with a very nice dividend. And then you get, if you look at the larger extension, you can do something like this. You get the coronavirus lows and then the quick bounce back, and then you get your lows again, and there you go. So what I am figuring out, and you can see the 61.8 and the 100% is matching, and then the 100% on the longer time frame is matching the 261.8. You see what I mean? Like, it's all mathematical. Some people might chart it like in the longer time frame. Some people might chart in the shorter time frame. It all ends up being in the same place, honestly. Okay. So let's go ahead and delete this longer chart frame because it just tells us that, it's matching the short term. Is a huge flag. Okay, look at this flag. Okay. Now again, you can take a line. Guys, oil sector, and I think the oil sector, and it looks like airlines and cruises will move with this move. That's what I'm thinking. I'm gonna go ahead and take this and place it right here. So you're looking at $117. That would basically indicate back to the all-time highs previously before the crash. So if you're going for this name, guys, I honestly think that the oil sector, look how accurate this is. The oil sector and the airlines are pretty much are going to go up. I just deleted it, but the flagpole, the flag, the pennant, whatever you want to call it, it's just going to move up. That's what I'm seeing on the chart. Nice cloud support. If it comes back down 89.50s, it's a nice play. The MACD looks nice. Stochastics looks nice. Everything looks nice. The chart is ready, guys. The chart is ready. Now, a lot of people have been telling me, like, I know you guys are watching other channels and they're saying like, okay, the oil sector is going to go up. And I always like to say this, when they say oil sector is going to go up, they tell you right there and you buy it and it crashes down. I always say wait for the cloud support, wait for the double bottom confirmation, wait for the breakout, wait for the 61.8 to break above, and then I'm more comfortable telling you guys what, okay, the technicals are ready. It doesn't mean that I'm not, I don't see the future. Yeah, obviously it's going to go up. But the thing is, it's telling the people to buy or get in. Again, not a financial advisement, but technically a buy point would be don't get the first spikes. Make sure the double bottom happens. Make sure all the moving averages MACD are ready before you get in. Okay, that's all I'm going to say. And probably if you ask me to, chart Shell or BP or Boeing or other airlines, they're probably going to have the same chart. Okay, more or less, they're going to have the same chart. So the next stock, so we're leaving the oil sector alone right now. We're gonna. Why am I writing 42? I meant to say DS. That means I'm tired. Okay, DSS. What is this? The sign says quantum, I think, and it says document secure, right? Not really familiar with this name. Low volume. I don't like to chart low volume names. It's very hard. But again, when you have a MACD crossover from the low, stochastics going up, RSI had a support at the oversold territory. Now it's picking up. This tells you to expect a move to the upside. Now, because we're underneath the cloud, that changes everything. You can have a move like this, touch the cloud bottom, come back and slowly move up. So I believe it could touch the cloud bottom somewhere around 530s and then slowly come down and pick up afterwards. Okay. I don't know this if this is a short squeeze play. I don't know the company not enough to tell you, technically we're ready. As you can see, again, the most upside to this, I'd say like the first one is 527, as I mentioned before. The second resistance will be 635. Until you clearly break this and then get a support, that's when you want to get in for the longer term. In this case, I don't know if this company is new or recent name, and you want to be one of the first investors, you can go ahead and do that. Square, buying Square, IPO it hit like $20 and came back to 12 now. Look at Square and how much it is. So if you want to be an early investor into a new tech company or something, that if that's your goal, that I can't know because I didn't do DD on the company. But if you were to ask me the resistance, 520s and then 650s. Okay. Next up is EA Sports. As a kid, I love that EA Sports to the game type of thing. Loved FIFA and all the, used to play football with my friends, Madden. When I played Madden, it was Madden 2000, Madden, I don't know, 2002. Love the cup and handle, love the inverse head and shoulder. So that's, a lot of people ask me, how do you chart? That's how I chart. First, I look at the chart without any indicators and try to see if I see a bullish sign or a bearish sign. So first thing in hand, ignore all the cloud, ignore all the moving averages, ignore all the internals. Okay. Now, what do you see when you first look at this? You get the left shoulder, the head, and the right shoulder, and that's your neckline. Okay. That's one thing you see on this chart, which is an inverse head and shoulder, and it's bullish. Okay. Now, what do I see second? The second thing I see, obviously, is a cup and a handle. Okay. And then you can go ahead and do, okay, what about the averages? What about the internals? What about the cloud and so forth? So now that we established that this is a bullish chart, okay, we can take a look to see if our thesis is correct. So let's take a look at the internals. MACD is not totally ready yet. Stochastics is reversing. RSI is not ready yet. Okay, so we get half signals. Now the earnings, it went down, but then the 20-day moving average, is that 20? No, I'm sorry, that's 50. I think I changed colors, so it's like I'm getting off. I think before the 20 was pink. So anyhow, 50-day moving average is supportive. Okay. Now, if you want to break out of this, one thing you need to watch. If this level can break out. Okay. And then you get a support at these levels, which is pretty good. Now, if you want to get in, the safest bet would be, again, if it revisits the 50-day moving average on the daily chart, and that would be nearing like 140s. However, if you're a long-term holder, I wouldn't worry about the stocks. PlayStation 5 is coming out, and PlayStation 5 games are not even out there yet. So this tells you you're ready. You're going to be ready for a run. You see how the 50-day moving average was a big resistance here, 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 and then it just broke out. Now it's testing to get a support, and that's a good sign. And let's draw an extension for you guys just to see where this can head up to. And again, this is the short-term frame. Anything can change. And again, I don't do any magic. It's just where you're supposed to draw and connect 3 dots, and I'm not a magician. And here you go. 61.8 retrace extension, hit it, came back. And even the 9-day moving average support would be nice, around 143. So again, a clear resistance of the body of this candle, and then connect a couple dots here and there. Again, not doing any chartists out there that think that they're rocket science engineers or whatever. Go spit at their face. Charting is not a rocket science. It's just experience. I mean, I respect chartists, but I don't respect people who think they're, the next thing. It's a simple science, guys. It's a simple mathematical equation. Only thing we're doing here is connecting few dots here and there. Okay. And sometimes people can't even do that and brag about themselves. Be humble in this game. Never panic. Go with a plan, and you'll always succeed. Okay. So my goal would be 153 and 163. A cloud, a channel support, a 20-day moving average support, or a cloud support would be a nice entry. You want to wait until you either break above the 61.8 and then move up, or you want to wait and buy this at the levels that we just talked about. Okay. Next up is my dearly FUBO. I was excited. The chart looked nice. We were about to break out. And then what's concerning is that the MACD is about to cross over on the bearish side. Stochastics, everything is just like, oh my God. It's frustrating. But again, what's positive? What's positive? We want to look at the positive side. You always want to be positive. You think positive, positive things happen. So the chart, especially here, that we closed above this trend that I just drew yesterday. And some people were asking me, it's reaching the cloud top. What do we do? I mean, I can't tell you to buy. I can't do trading advice. I'm not your person. I'm not taking money from you. I'm not doing financial advising. I'm not, selling you buy and sell signals. I'm just drawing stupidly. I'm just drawing like a retard here and telling you what to buy and sell. No, I'm not drawing retardedly. I'm drawing very critical points. I am technically telling how charts could be drawn and I'm saying a buying opportunity or selling opportunity technically could be here and there. Now it is your choice, your responsibility, your risk taking to pull the trigger. Please, I want to be nice and polite to everybody. Please do not message me. I have a daily job. I'm busy during the day. Please don't message me and ask me if I should buy and sell. That's your business. It's not my business. But what I can do for people is I can show them how I draw things. I can show how technicals things work. And then you can say, okay, according to the technicals, it should bounce from the cloud top. It's not there yet, but I'll go ahead and pull the trigger. And then he also said the worst bearish scenario could be this thin-lined cloud top, which is around 37.87. Do I have enough dry powder if it gets there? That's the thing you need to think about. I am not your nanny. I'm not going to tell you every single time where to buy, where to sell. I never tell you to buy, where to buy, and where to sell. The volume is drawing. I believe that this stock was just going to move, touch the 50%, and it almost touched the 50% fib level. I was so excited, and then bam, the market crashed. I mean, what a perfect timing. I'm sitting here, I'm saying, okay, we broke about the 9-day moving average. We're going to 50. I think we're going to go ahead and touch the 61.8 and pull back a little. I was super excited and celebrating, and all of a sudden, they took that away from me. That was, I don't know what to say. My heart was broken. No, I'm joking. It's the markets, guys. You win, you lose. You take away some, you lose some. That's how it is. Don't get emotional, okay? We're back in the game again. I already told you that this thing can move all the way to 37.57. If you think that you lose the 20-day moving average around 42.12, you can sell and you can buy back. And if it pulls back at 37.38, or you can just keep and play that diamond hands and keep it, and then you can keep it till 76.4. Obviously, the first stop is going to be the road stop is going to be 55.97, but I've seen this thing happen in Palantir. Keeps touching the 50%, coming back. Keeps touching the 50%, coming back. Went to 61.8, came back. Went to 61 point, came back, and then boom, 20%, 20%, 20%. It went up like from 22.50 all the way to 44 bucks. Okay, so this can do the same thing. A lot of great investing. I've seen it somewhere like Morgan Stanley, Vanguard, Discovery. All these people just bought millions of shares, and they know what they're doing, I guess. That's what I'm thinking. So this is going to be forming an ascending triangle, as we just talked about, a cup and a handle. Now let's see if it can follow up. The volume is drying. I say that it was a great day yesterday, and if markets follow up, we'll follow up with it. Of course, people were in some pain from all these couple days. And then look what happened, they were able to hold. If you were to buy in, they were able to hold, and they're like, okay, we're back at the top. That's what happened basically. So people who bought here and got caught, they went up there, they're like, oh my God, I'm break even, and they sold, and it just came back down. Okay. But again, FUBO, my target never changed. It's 76.40. It's totally normal to hover over the cloud. This 9-day moving average is just a nightmare. We need to grab that as a support and slowly move up, okay? That's FUBO. Next up is GSAT. I believe this had a nice move today. Yeah, 15%. Again, please don't ask me when you see a parabolic run, because at this point, technicals might not work, music might stop, and you might be the last one standing. And when that happens, don't blame me or my technicals. So what's more challenging even is that it closed right, where did it close? Like 241? Yeah. It touched, you see how perfect it was? And I could make this like a little better because, I didn't know if I got the lows or the tops. And, it's just a couple cents here and there. Don't worry about it. Okay. 9-day moving average was a support. You buy this curling bottom, and I keep telling people how many times, right? When you see a curling bottom and you draw a semicircle and you broke out of it, that's when you buy. This is not where you buy. If it goes up 100% more, that's not, that's That's okay. You get lucky. But speaking of technicals, right? Rounding bottom, you draw the downtrend, you broke out, this is where you buy in. This is not where you buy in, or else you'll get that. Or else you'll even get this. Or else you'll even get this. And then a curling bottom around the cloud top, and then the next run. And then you'll probably sell here because this is where you got it. And then you'll miss that next 100% move. So I'm not saying that this stock is bad. I'm not saying the technicals are bad. It's just that any parabolic run is dangerous. Okay. I'm used to trading, between 2009 and 2018. A lot of people are used to trading the coronavirus, stay home, 2020, you buy and you go to the moon like 100% to 1000%. That's not how the real world works, okay? Just get off that dream, get off that sweet dream, wake up and smell the coffee and get yourself ready for the real world and what's to come in future years. This is not where you buy. This is where you buy. This is not where you ask me if it's technically okay to buy. This is where you ask me when you see that rounding bottom. Is it ready? We just broke off of that 9-day moving average. Now it became a support and we broke out of this downtrend. And I'll be like, all right, man, I'll buy with you. Bam. Okay. This is a suicide. This is smart money. This is dumb money. Okay. Even losing this from $2.87, $2.98, and you finish at 240, what's that damage? And I'll do it right in front of you. 2.98 minus 2.40 for the dummies. I can do this in my head. Now the division I can't, okay? 2.98. That is 19% in a couple minutes, guys. So again, 19%. Like this is what I want to say about. I know I kind of went off a little, but this is what I have to say about these stocks. Don't look at the daily. You have to look at the 30-minute chart, and you can say, okay, it's coming back down to 221. I'm going to buy it. I'm going to sell it here. You need to look at smaller time frames. You need to look at 15-minute, 30-minute. Okay, it's not my cup of tea because I've had some bad taste in my mouth recently. I mean, like I know I reviewed like ASTI, right? Solar stock, penny stock. It could go up 100% tomorrow, but it's just like, how much money would I put in? Maybe 0.1% of my portfolio. I wouldn't go in with like 50K, 100K, and like bet my life on it. And that's what I'm trying to tell people. These are good stocks. It could be good stocks. It could be just a momentum stock. But when you put the money in, you want to make sure you're putting the money that you're willing to lose, kind of like you're playing options. Okay. So that's all I'm going to conclude about, these high flying, fast flying, cheap, cheap, maybe under $2, $3 range stocks. Okay. So next up is HIMS, HIMS. HIMS and HERS warrant. Let's see, HIMS and HERS. There's a warrant for it as well. I don't know if this was a merger off of a SPAC. I just don't know. And it just seems like that it's been like $10, $10, and 25. Okay. It's very, very difficult to do a technical on something recently off of a merger. Like we have Clove, right? It's going good and then bam, this is a good bounce. Let's draw the extension to see like where the life could end for this one. And it is telling you, this is a clear picture. So you want me to tell you technicals, I'll tell you the technicals. But I cannot tell you how much it's going to move further. Okay. Now, as you can see, it reached 161.8 Fibonacci level, came back, got a support at 9-day moving average, and just take a snapshot of this screen and you do your own judgment. To me, it's a rounding top. To me, it could come down all the way to 18 to 17. That's to me. But to you, you might done a research, you've done a homework, you know the company. I honestly, HIMS and HERS, I don't know, maybe I'm missing something. Last time I said I didn't know about the company, it was actually the Twinkie, the dessert that we used to get as a kid. but I didn't know the distributor or the actual parental, company of it. So I just said I don't know, but obviously I knew the product. Maybe I knew the product. I know the product to this company. I just, happen to not have any knowledge about it for now. So you can see this is the trend, and again, it comes back in. I don't know. I don't want to say anything besides the fact that yes, it did reach 161 extension, and it should get a support at 100 fib, which is 2071, or the 61.8 fib, which is at 1777. Where it could go is $33, but at this point, I can't promise you that because it did get sold off a little. Again, I don't know. It could have been like something like Clo, like Clo was doing good and then like a short researcher came out and said something and then it crashed. So I don't know if that's the scenario for this company. All right, next up is Lee. I mean, I've done Lee yesterday, so I'm just going to spend a quick 2 seconds on this one to see if anything changed. If you guys watch the videos daily, and my comments would probably stand. Again, a cloud top rejection, as I've told many of you, that if it goes up, it's probably going to go to the cloud top and get a rejection. 9-day moving average should be your support at 315. If not, you're looking at a support of 30 bucks. If it breaks above the cloud and gets a support on the cloud, on top of the cloud, that means it's a bullish move. I covered this yesterday, and if you want me to draw a smaller extension to see where it could go, obviously we don't know the second leg of this. Let's say that we take the bottom here. You're looking at this range of $35 to 36 and then 39 to 40. That would be the 2 targets that I would have. Okay, let's move this target. I know I'm taking off the bigger fib because the bigger fib is your ultimate target, but the shorter fib actually gives us a, shorter term target, obviously. But yeah, this should be your target. So you could hit 35 and 36. Let's delete the bigger one and let's delete this box and say that, okay? So look for this range of 35 to 36. But again, first thing first, you need to stay above the cloud to do that. If the cloud top rejection is strong, you could revisit the 100-day moving average, which is sitting at $28. Ultimate goal on this stock should be the previous top, which is around $47. Okay, so that's Lee. I hope nobody asks this tomorrow because again, nothing changes during the day unless we break above the cloud or something. Like if you guys ask me different stocks, it'll be to your benefit. So here we are, next request, McDonald. I'm happy that somebody actually asked me this. I get a feeling that a lot of us are just on this momentum plays and like the COVID trades and people pumping the stocks and people are getting into it. By the way, speaking of pumping, I mean I don't think it's a pump or anything, but SNDL, holy moly, guys, it's after hours. I mean this stock is unbelievable. I don't know what's going on. It hit like 380 or something just a minute at 364. It's a 260 when I looked at it. That's like a dollar. What is it? Like 36%, 38% gain right after the after hours. I mean, wow. Amazing. I mean, I don't know. Am I jealous? Yeah. I mean, I don't have the balls to go in and put like 50, 100K and just gain like 36% in an hour. Again, if that's kind of your play, that's your play. But I'm not a McDonald guy either. So anyhow, speaking of McDonald's here, I think that it broke the downtrend. So this is what we're looking for. Of course, this is a slow moving play. It's going to be a little even slower than Disney in my opinion, but this is what you're looking at. Okay, let me take a picture of it. Let me take a quick picture and tell you that it's a rounding bottom. Okay, it could come back, retest the cloud bottom, retest the trend line. Your resistance will be this line, which I'll tell you in a second. And then you're going to go ahead to the all-time highs, okay? Or I'm not sure if this is all. Yeah, it is all-time highs. So your resistance is sitting at 218, which is going to be a heavy resistance because it's going to be the cloud top and the fib line of, well, that's the previous top. So you're basically testing the previous highs of February coronavirus crash. And it's not going to be easy to overcome that. But in the same time, I think it's going to retest this high right here, 227 to 231. I think it's going there. It's a good stock. I like the rounding bottom. You want to get in and you want to wait. Of course, it's a slow moving stock, so it's been going nowhere since October. That you got to reconsider as well. But if you take a look at it in the longer frame, let me delete this fib. Okay. God, can I get rid of this? Okay, there you go. So if you look at it in the bigger frame of things, here you go. You get a nice pennant or falling wedge. So it seems like it broke out of this falling wedge. Okay. Now, if you tell me to go ahead and do a new extension, I can do that for you. So I can feel what you're asking. I don't have to do a live channel or live session. I can already even think what you're asking. So previously what we said, it's 231. So you're looking at this range. Again, it's like a 401k college fund type of stock. Of course, can it go down? We've seen it in February, Corona crash that it did. So you're looking at 229 to 235. That should be a range. Maybe a year or so, your ultimate target should be 288. It's a good stock, no doubt about it. You can do another extension. Let me go ahead and do that. Wow. You see, we broke off of that 100% fib, and you see how this 161 extension off of what I just drew, and the 61.8 on what I've, first draw coincides and it just hits the same target. So that tells you that, it's mathematical. It's just not a game, obviously. So why am I not able to? I have to go from here now. All right. So that's what I have to say is you might set your goal to 235. That should be your ultimate target until you get another rejection. But obviously the cloud top is going to be your first rejection or first resistance around 218. Good stock, good question. Finally, we get something different other than the same old stocks every day. So next up is NEO. I just reviewed this yesterday as well. I don't know what changed since yesterday. MACD is still good. Stochastics is still good. RSI came back a little, obviously, after today's action on the market, SPY crashing down and letting all the traders go panic. Obviously, good thing is that today it broke above yesterday's high. Now, if it wasn't for that quick drop on the indexes, it would have went up higher. Your next stop is going to be 66.96 and 69.88. If it pulls back, you're looking at 58.80 and 58.31. It's a good support level on the 20-day moving and the 9-day moving averages. Nothing technically changed today. You don't have to panic about it. Okay. Next stock is Peloton, and I talked about how I changed out my workout procedures, and instead of lifting heavy weights, now I'm more on the fitness, like body weight fitness exercises, pull-up, push-ups, crunches, jumping jacks, your grandmother's, grandfather's type of exercises. Again, so I told you that I was going to compare Apple Fitness to Peloton Fitness, the subscription. So since I got a watch, I've told you guys that I've got a gift. One of my friends gifted a Apple Watch Series 6 44 millimeter watch. So I thank him for that, and I got it. And then I got a free 3-month subscription for Apple Fitness. Of course, I'm not going to pay money for it. So tried it today. Oh my God, I'm out of shape. And it was like a 10-minute workout. I survived the first 4 minutes. I was like, screw it. I'm sitting back in my chair and looking at the stocks. Jokes aside, I need to work out, guys. This stay-home thing just killed me. Wow. But I had some issues connecting my Apple Watch to my Apple TV, which was kind of annoying. So I had to watch the whole exercise off of my phone, which was not pleasant. And however, I like the quality of the workout. It was pretty good. I like how that my Apple Watch heart rate monitoring, calorie burning, and all those numbers just showed up on my phone, and I'm assuming that it would have on the Apple TV, which would have been really nice. I'm going to search deeper and troubleshoot to see why the connection didn't happen. But next up is going to be Peloton subscription, and I'm going to compare both of them just to see how they differ or not. Remember, we were up here, guys, coming back to Peloton before the earnings, right? we were up here and like it was all good and it was like here, right? Actually, we were right here. Right before the earnings, we had a huge day, right? And I said, we're going into the earnings and guys, just watch out. I'd be safe and just watch for that cloud top confirmation, and we're getting it. Wow. Even at today's killing market, it's only down like 1.85%, 1.84. Maybe a little more down, maybe 2% after hours. But wow, I honestly didn't draw this now. I drew it, way back. And it's working out, guys. It's the technicals are good. I said that it would come back to support the 50-day moving average. Just check out my video on the last Peloton one and then the cloud top. So we're getting confirmation. Are we ready yet? No. Let it sit down, let it hover over and it's good. Like it's been staying pretty good. 9-day moving average is going to be a resistance for now. If we go over it, the 50-day right here or the 20-day right here, which is sitting at 152. Your ultimate resistance is going to be 153. Now, this is what I'm waiting for. The rounding bottom and a confirmation of a breakout, then you get in. I probably get in if Peloton is going to be able to stay above 153.53 for a couple days. So that will tell me that would be a confirmation. But in the long scheme of things, look at this. Look at this rounding bottom. It's working out pretty good. And if their subscription rates go up, and if people are lazy like me and say, screw the gym, I'm just going to do fitness. I don't care about lifting weights. So, that's going to be the trend of the new age. Let it be. And I enjoy doing the fitness rather than lifting weights. Going into that sweaty, bench, no matter how much you wipe it. I don't know where, what people are sweating. So anyhow, you want to build your private gym at home, that's yours. I don't, my home is not big enough to, well, it is, but I'm not going to waste my space for a gym anyway. So anyhow, yeah, good support on the cloud top. There's obviously a, resistance, of of the downtrend. As I always say, and as I always tell you guys, plan accordingly and don't chase. So this is a good opportunity right here, the rounding bottom, and you have that falling, downtrend. So we break above, this is where you buy it, and that's what I was mentioning, the 153.53 area. If we stay here a couple of days, then that's going to go really nice, and it's probably going to do a cup and handle. Okay, I go bam, and you're going to run it, and I said my ultimate target is $200 for this stock. Now, next up is going to be run. So before we even look at this name, I think I should have fixed the Peloton Fibonacci tracement, but that's fine. So looking at this name, right, I'm already expecting a run up. Well, it didn't even run as much as other solar stocks. I like the MACD crossover. I like the stochastics, RSI. Everything about this tells me bullish. I like the crossing averages turning towards a bullish run. I love the cup, and I love that it's forming a handle. We can draw two different extensions off of this. I like the chart, by the way. So first thing first, all the indicators that I'm looking at above the cloud, internals look good. The moving averages are about to cross over. MACD is about to cross over. Give it a couple days. I know it has earnings. I don't know how earnings are effective on this name, but everything about this stock tells me it's going to go up. And I know that a lot of people had, drawn this, falling wedge thing, and it didn't work out. It didn't work out because they don't look at the other internals and externals. Like I love Trader Stuvie and all the other, reversal play accounts there, but they're not looking at all the factors. So sometimes when this falling wedge occurs, it might bounce and then get crushed because the 9-day moving average is obviously a rejection on the daily. And then the 50-day moving average was a support. Okay. Right now, the resistance is 20-day moving average. However, the 9-day moving average is curling up. So I'm looking at a bullish crossover. We're probably living this moment right now. So it might come down again and so forth. But this run right here is going to be very similar in a bigger run. Okay. And I'm not sure if Sunrun is a Chinese name or an American name, but at this point, we don't care because we're looking at the technicals. So I see a huge gap here, and I see a cloud top here. So if this runs up to the cloud top, look for another cloud top resistance or a bounce. Probably look at the Fibonacci level 84. So this could probably run up to 84, come back down to 80, and then go ahead and fill the gap around 89, 90 bucks. Where do I see the gap? Let me go ahead and highlight that for you. This is the gap right here. Okay. This will be your play. Play the gap, let it rest at Ichimoku cloud top, and then go for the next one. So that's the smaller extension, right? Now let's go ahead and play the bigger extension. So the bigger extension would be here, here, and right here. So it's even above the cloud. So it's even above I'm sorry, I've been speaking for more than an hour, so expect me to fumble a little bit. So the gap and the fib line, it doesn't match, but I'm going to go for the fib because I always go for the fib. So expect a run to 84, come back to 80, and then go run for 90 and 95. I like this. This could be a bear flag, who knows? But your support is going to be 73.4. All the indicators internally, externally, everything about this chart looks bullish, so I am bullish on the chart. And in fact, let me go ahead and draw another trend line to connect the tops. You're looking at eventually $112. I love this rounding bottom. You see this rounding bottom? Okay. And a break out above that is going to be explosive. But again, and let's go ahead and draw the support channel here as well. There you go. Oop. There you go. I'm sorry, I've totally screwed up. So let me just zoom in because my eyes are bad. My eyes aren't bad. I think they're just starting to get bad. There you go. So we're at the bottom of the channel, and that's where you want to get in. This is not where you want to get in at the top of the channel. I think I kind of screwed up the top of the channel as well. There you go. The top of the channel, if we slowly go, you can go up to $112. Again, it's all, you have to do your research on the company and so forth, but it's been on a curling bottom. It's been consolidating since this last huge run. So the next run, the next wave, it's going to be at least 110 area. Next up is SAVA, S-A-V-A. Okay, let's take a look at this. I don't know what this company does, but what I can tell you is that this is what I've been trying to tell you guys, that when you see a parabolic run and you caught at the wrong price level, and bam, now it's testing the 9-day moving average on the daily. The MACD hasn't turned around, so this could continue to a bullish run or reverse back. So the internals aren't really an indicator at this point as such on a parabolic run like this. But what I can tell you is the volume is drawing up. The sell wasn't that much as far as the buying. I don't know what the news was that drew this company from $10 to 117 within a month of range. It's even a 3-week range. Wow, amazing. So let's take a look. The daily would not be a strong indicator on this one, but let's take a look at the hourly. Now the hourly has some technical damage. However, the MACD is still, coming along. I like this. I like that the MACD is doing higher lows. Stochastics and RSI is okay. So, but the issue is you cannot lose. Let me draw you a line. You cannot lose this trend. Okay. So obviously it's on a triangle. Let's see which way it goes. There's a strong cloud resistance around 57.64. I look at the hourly chart. I take a picture of this and I'll say that just remember your levels. If you want me to draw an extension for you at this moment, I'm not sure how accurate it will be after such a parabolic run, but you're looking at, and again, like I'm going to be conservative and you might say like this guy is crazy for giving such a low number. 60 to 63, eventually $88. If the news recovers and if the rounding bottom is more determined, we'll reevaluate things. But I don't like the pump stuff. You know how I do things. So, and you can draw a bigger, like if you want more extreme prices, extreme extensions, you can get this base and this low. Yeah, you can say that, okay, if you're bullish on this name, this range makes sense. Okay, why didn't I not? Okay, there you go. So this range makes sense. And then you're looking at, you see how similar the architecture of these. One, I took the bigger one, and the other one, I took the smaller range. And look how where the meet, like 100% and the 423, 61 and 261.8, 61.8 meets up. And the 50 is very close to 161. So this is what I'm talking about. Like regardless of where you draw your fib, As long as it's reasonable, then you're good. You'll get the same, just take a picture, take a screenshot off of your monitor and write these levels down. But then again, the stock cannot lose your, this lower trend line that I just drew. And you're apparently sitting right around that level. Okay. So watch out. Okay. But the squeeze out, you're looking at 60, 63, 73, 88. Okay. That's all I got to say on this name. Hopefully you didn't get caught up here and you're just trying to reevaluate and get through the bounce. Okay. Next name is SINO. I'm not sure what SINO does. Let's take a look. SINO Global Shipping, I guess. Is it a global shipping company? On the hourly, the MACD is crossing over. Stochastics RSI telling me for the next move is upside. Let's take a look at this daily. That's what I don't like. Like when you, again, I've been, and the same names over and over again, guys. I mean, here parabolic run came down, went even higher, came down and like suffered for a couple months. Parabolic run came down, parabolic run came down, parabolic run came down. I don't know if it's going to go to 20. I don't know if it's going to come down to 3. And whoever tells you that it's going to go to 20 or 3 for definite reasons are lying. 9-day moving average is holding it. 20 and 50-day moving averages will be your next support, but I don't like to give price targets for these. I can do extensions and tell you where the extensions are telling you where it will go. But as far as that goes, I don't think you're going to get anywhere near. So the top it shows me 1189. But again, these can move like 100% within 2-3 days. We don't know. Nobody knows. And if you're getting in, you're just gambling at this point. So let's take a look at the next. Next up on our list is SRNE. We reviewed Sorrento before and it hit top of the channel. I'm not sure if you asked me to review it because it hit the top of the channel. This is why I tell you guys to take a look, take a screenshot of what we're drawing, because number one reason is I reviewed the stock. I probably say it's a good buy and you should buy it if it comes back here, there. Technically it looks this way, technically it looks that way. So what I do is if it hits the top of the channel, I mean technically that's where you sell, and also it meet up the 161.8 extension. So I don't know when you told me to review this. I don't know when I reviewed it, but all I can tell you is I don't know why I drew this extension back way back in May. Maybe I was reviewing the stock myself. But we can do something like this. What did I do? It didn't click correctly. So it can go up to $22 and hit this blue trend line that I drew way back. I just don't like when the trend line meets up. I think technically it could run more because of the internals are still bullish, but I rather get in lower out of the breakout of the cloud, coming back to retest the cloud. This is where you get in. Okay. If I tell you to get in, if you look at the hourly, I'll look at the hourly, but I think I see 1455 for retracement. You see how established these Fibonacci's are. On the hourly, it's sitting right at the cloud bottom. It could come down to 1395 to 1427, that area. Your next level support, though, the highest level support is 1487. I think that coincides with what I just said recently. The 9-day moving average was 1453, 1427, 1453 will be your next support. And then I look for the 100% fib. Okay. So right now, this is not something that I like to buy. I don't care if it goes to 100% more. It's because it's sitting right at the Fibonacci retracement or the extension and the downtrend line. So next stock is going to be THMO. I think I reviewed this before too. I actually didn't. Wow, I like the name. I see, this is what I'm talking about. The curling bottom off the cloud, from the off the cloud bottom, and it came to retest. 9-day moving average is a great support. Let's zoom in the chart. You want to get in early and ride it up instead of buying it high, selling it, like buying it extremely high and selling it for a little profit. This is a safer play. Again, I mean, any medical name is not safe because, you know, their research or their, you know, their phase can go wrong. You're looking at a support 336. Don't worry about today's action because of the market sell-off. I like the chart. If you can, again, these could be names that you can buy and hold. That could be a great idea. But again, I have no due diligence on the company. I like the chart. If you really want to buy the dip, it can go to 331. Again, it's the 9-day moving average ends up being. But let's take a look at the where it could go scenario, right? And this is going to be very difficult because it's been down so much. We could look at the daily act. I mean, we could look at the hourly actions, but I want to give you a long-term target first. So let's take a look at this. And it might not be too accurate, but let's take a look. Long-term target 820 to 966. Now it's a wide range because I'm doing a long-term extension. It might not technically be correct anyways, but who knows, right? So let's go to an hourly and try to resolve things here and there. Um, on the hourly, you see how well I drew this? Like even on the hourly, the trend line, I didn't even see the hourly chart before I drew it, but it's been such a good support. You're looking at 364. Bottom of the cloud right here should be your like minimum support. So I mean, 353 should be a very nice support. And the bottom of the channel, we said $3. I hope it doesn't get there for the holders because I really like the chart. You can draw an extension like this. All right, so you see the save right here. I'm not sure if it was today, but if it revisits the cloud top, so 371 looks good. I like this channel that we drew anyways, and let's zoom out for the targets. So zooming out for the targets, your ultimate target 656, and then let's draw a box here because I like how they intersected each other. So this box is going to be pretty good. Looking at 513, 656, that should be your goal for this name. Let's take a look at the daily chart back in the daily chart. Yeah. So let's fix this drawing of the box. Yeah. Charts don't lie. I mean, yeah, it's overextended, but you want to position slowly. It was 234. Now it's, you know, it hit like 444 today. You want to take a look and rest this a little. That's fine. But I mean, looking at the overall picture, it has some room to run. The way that it broke the cloud. Let it come back to you, then you buy it and forget it type of stock, and you never know if it hits $8, $9, then you're making, you know, 100% with the money. Next stock we're going to look at is TIGR, T-I-G-R. I just call it Tiger. It's not Tiger. Okay. It's a FinTech Holding Limited. I've been hearing this name and the run. See, this is what I mean. Like, you guys can ask me, like, oh, you know, I can say it's overextended and it could run up like another 100%. So I'm just looking at it technically, right? I can't know where the stock is going to go at all times. If I knew that, I'd be a millionaire. And remember that we drew this, you know, upper trend line. It's getting close to it. I'd go for this support 28.74 or even at 24.19. Those are the areas that could drop. Now you guys probably asked me somewhere here, and the extension and the box that we drew came and supported it and ran up higher. I'm sorry, but at this level, I can't, because anything I say, you guys are going to take it as targets, and you're going to take it as a sell point. With these names, I'm very careful. With these names, I want to be conservative. You want to go and ride it up to 37.16. That's where the extension is. You want to get back in. 2354, that's where the 61.8 extension is. But I see huge buys, institutional buys. First sell came in today, but I think it's kind of a outlier because it was, it finished the day. It was going up if it wasn't for that SPY or the index crashes. I think that overall for the last couple, I'd say for the couple weeks or days, it's been a strong buy. The volume, it could be an institutional buy. It could be that the stock is going to go much higher to $72. I don't have that much type of knowledge for the company. I don't know if it's I don't know the company. That's my fault. But if you ask me, if you look at the volume, look at everything else, it's bullish. But let it rest a little. If you have the name, you can hold it. But if you want to get in the name, I'd say I'd wait to see if there's this kind of a flag. Like if it flags, it's reasonable. But other than that, I think it's overextended from 16 bucks to 31. That's 31.85. So if you say 32, that's 100% since 15 days or so. That's all I gotta conclude. So you do your own. You do make your own decision. I can tell you the support levels: 28.74, 23.54. I can tell you it could go up to 37 and 50, and ultimately, if you're super bullish, 72. But then again, I can't say anything about the name. When something goes up 100% in 3 weeks, that's not something I'm accustomed to. So that's beyond my knowledge. You can zoom in, look at the hourly levels and so forth. But then again, I'm not going to do that. We're already hour and 30 minutes and I'm really tired. I'm just going to move to the next name. Next name is basically UAVS. Again, all the stocks that I've been receiving for requests are on a parabolic run. I am not sure you're asking me to see if you have a position and you wonder where to sell, or if you don't have a position and you're wondering where to get in. I could say that the chart is bullish. But again, it's not my style of going in a stock when it's, up 100% within a month or so. Unless if I receive these pullbacks, like if you were to ask me here, the 20-day moving average support, support, support. Again, I'm just going to keep on repeating myself. And everybody asks me like how I get in charts, how I pick names. First of all, I'm not that successful. Like I'm not a guy that, makes 100% every year. So you shouldn't take me in as an example, but if you want to see like breakouts, again, told you this many times during this video, right? That's what you want to take. This is what you want to take right here, especially when you see this 9-day moving average support, 20-day moving average support. Now, if you're asking me to buy here, if you were to ask me right here, I would be like perfect timing. If you were to ask me right here, not because I'm seeing the chart now, but you see this formation, right? You see this rounding bottom and the falling trend line, downtrend line, right? And you break out of it, bam, flag, and go. So what's going to happen is bam, flag, and go. So you want to buy it somewhere here. You want to buy it somewhere here. You don't want to buy it here. You don't want to buy it here. It's definitely a distinctive trend. Okay, you look at this. It's a trend. Okay, so it could either run up, hit this top trend, and come back down, and then go for another run. So that could be. Let me clear up the picture and take another screenshot. It's an interesting name. I can tell you that. Interesting chart, very defined formation. So you look at this formation right here. You see this up, down, up, down. So the up could move another, maybe tomorrow we wake up and it goes like 20% or something and hits the top of the trend. I would not dare to get in. I'd wait for this downfall and a support at the 50. Now, if it goes higher, it goes higher. I won't feel sorry for it because I'm trading with common sense. Okay. So, and my thinking is that it's going to do something like this, right? So if you think that this is the midline, what it's going to do is it's going to flag, bounce, and go higher. Okay. So let's take a look where the prices and the levels are if that's the scenario. Okay, so I would say that the flag and today's close is what, 1569. So I'd say that if it comes down to 1518 around there and it hovers over and you see a rounding bottom again, so something like this, right? A flag, it bounced off the 20 or in the 9-day moving average. I mean, unfortunately, the 9-day moving average is way down here, so that wouldn't be a flag if it goes down there. The buy volume for the last couple of days has been good. If you see a buy volume, strong buy volume like this, and then the volume dries off with the selling, and you get in and it just kills you and it drops like a couple more dollars, and you're like, oh crap, I'm stuck. But look at this cup and handle, and then bam, right? So next thing you know, you might do another cup and a handle and bam, but that could take anywhere. So we're at the cup level. So 1, 2, 3, 4, 5. So that should take, give or take 4 or 5 days. And let's watch the formation that it's going to do. You have to be patient, guys. Like you're not in 1, 2, 3, 4, 5. You're getting what, 294 to $8. That's like 150%. Look at here. What is it, like $3? Yeah, 3 to 875, rounded off, 3 times 2, 6, half per, yeah. So give or take, 150% in 5 days. What else do you want? You guys are so spoiled. Let it rest. Of course, you make 150%, it's going to retrace. So here again, you made, $11 to $18. That's like what, 80%, 90%. Don't get spoiled. Don't think that the sky is the limit. It's gonna pull back. It's gonna do its retracement, but overall, the stock is on a bullish trend. I like the buy volumes. I like the drying up sell volumes, and that indicates that the stock has more room to run. And if you're ultimately thinking that this is a super bullish stock, you've done your DD. Obviously, I haven't done my due diligence on the company. And I'll draw this if it allows me to. So, you can go down like this to 12.12 would be a great buy. And then you can ride this thing up to $24. That's another 100%. So the way the stock is moving, it's going like, okay, from $9, rounded off to $9, it went down to $4.84. So give or take like 100% down, like from $9 to 4.5, like 9, okay, 5, 80, 90% drop. And then from, $5 and went up to 15. That's 300% move. And then it went down from 15, so I'm guessing it should go to like $7.50, $8, right? Well, not even that. It's like $9. Yeah, $9.50 is the lowest. Then from $9.50, you can say times 3 because every time. So last move three bagger, 1.5 bagger. At least from 11, if it's a 1.5 bagger, you're looking at $25. So the next move it's going to come up to is $25. Okay, which is a good buy, but ultimately you don't want to get caught up here and like let it retrace back to 13, and then you're like, oh man, I bought it at 17, now it's 13. I'm like 20-30% down. That's the trick. But if you hold it, I think this is 24.45. The way the waves move, okay? That's what I'm going to say. I don't even know. I don't even hold the position. I don't know anybody that's holding this position that's close to me. So I'm not pumping up the stock. I'm just measuring how I look at things, the move lengths, and then the way I look at the curling bottoms, and it's the same formation again. Let it retrace, let it rest, and then the move up to 25 is evident. Let's look at the next stock, which is Workhorse. I haven't seen the stock for a while, and we were talking about a pennant, and I said the stock looks bullish. I think this wasn't drawn on the daily. Let's take a look at 4 hours, or the hourly, in fact. Oh, that's daily. Yeah, this wasn't obviously drawn on the hourly. So let's go back to daily, okay? What happened here? Are we surprised? I think the last time I drew this and it hit, the fib line, I'm not surprised at all. So the 9-day moving average could be a support and it could retest again. I don't like, like it's a nerve-breaking moment if you're holding the name. Big buy volume is drying off, not much selling going on, so that's positive. I think if it drops, it's gonna drop to $35, which is kind of $3. I mean, right now it's 38, so $3 drop is nothing because this stock can move tremendously to the upside. And if you even got caught here, right, just hold on for 2 weeks, 3 weeks. Like, what's your rush, right? Unless you're getting like margin called or something, I don't know. But if you're holding with your money and it's a cloud bounce, bam, right? 24 to 42, almost 100%. So after 100% move or 90% move, is it okay to slowly melt down and come to 33? Yeah, that's a big yes. Ultimate target on this one could be 56 and $80. Now, that's depending on the contract. Now, this is the thing about Workhorse. I know a little bit about the company, not much, but the way that this moved, I think this huge fall, was because of the USPS contract getting delayed, or I don't know what happened. And then it's like, bam, like 20, 30% downside. Now, I like the 9-day moving average support, but then again, it didn't mean anything here. It went down because of bad news. So that's what you're going to watch out for, is like you're holding this name and then like all of a sudden, you're doing your work and you look at the stock is down like 30%. That's because the news can take it. And I think that if you look at the previous highs, conservatively 33 and 32, 31 range can come down, slowly melt down and get a cloud top support and then move to the next move higher. Okay. Again, I'm not bearish on the stock. I don't think the stock is bearish yet. But we have to observe the 9-day moving average. Again, if you're a bull and you're getting pissed off from what I'm saying, I don't care because I'm not a bear for this stock anyways, or nor a bull. I'm just reading the technicals. 9-day moving average support, yeah, it's there. It needs to hold. If it doesn't, it's gonna drop. So you need to watch out for that. And that's what the algorithms are watching. If it loses, so here, look what happened. Lost the 90 moving average, tried to reclaim it, bam. I know this was news driven, but anyhow, that's what might happen. Lose the 9-day, try recap it, and then bam, right? So this is really important. And then to the upside, this is very important. You need to break above 42.46. If that doesn't happen, you're gonna stall and you're gonna do a rounding top, and then again you're gonna go down. Okay, that's the scenario here. That's the technical reading of Workhorse. Finally, the last stock of the day, and we're rounding an hour and 43 minutes. It's been a long day for me. Let's go ahead and take a look at Zillow. I haven't actually. I mean, I'm more of a red, not for the stock, by the way. And the thing is, I like to compare like how I compared Peloton, and I'm like, I'm actually gonna try the Peloton fitness thing, not the machine, but like the subscription for the workouts. And I'm gonna say like, okay, I like the product. I think it has some future growth and people will like it. So you're gonna have to test out the product yourself, and that's the best way to tell if the stock is gonna go up or not. So if you're thinking, Zillow versus Redfin, I kind of like Redfin for some reason. I don't know. Some people might like Zillow, but that has nothing to do with the stock. Maybe both the stocks move parallel. I don't know. Maybe Zillow is much better and they have like, business wise, like they're, planning on, different things. That's one thing. I'm just saying like as a user interface, I'm just giving you an example of, you know, how I like to test out the products if I have the opportunity. So what I think is, yeah, I think this is accurate. So you're looking at, you broke above this upper trend and you're stuck at the 100%. Your next move up would be 194. Next move down would be 151. And like I said, if you like to play extensions, they're your extensions. If you like to play the channels, there are your channels. I always say buy the channel bottom, sell the channel top. Now it could be like this, right? Resistance, resistance, resistance. And then, now there's another way of drawing this. Like I just draw it manually, but you can also draw it something like this. Okay, there you go. And I know that things are now getting confused, but let me zoom in. Let me actually take out the channels that I drew, my channels that I drew right here. And to make this more fair, we can say, okay, we can say something like this, and we can extend this, okay? You can go ahead and, where do I extend it? They never, label, right extension, left extension on. I do not like the color. I don't like the color red because then it makes me think it's going to go down. It looks negative. So wait, I extended to the left. That wasn't what I was supposed to do. The right extension. All right, so there you go. This is a regression channel that Thinkorswim does by default. That way you get the midline, kind of like the pitchfork, right? So you get the midline, the bottom of the channel, and so forth. So it could come down and get a support at 157.95 and then bounce back up to 177. I think that the ultimate target, it could slowly move down, hit here. So I'll go ahead and draw a box. And this is my forecast, and you might not like it or you think it would be wrong. That's your choice, and I respect your, decision. But I think it's going to slowly come down, kind of like this, right? Kind of like this. How it slowly came down to the bottom of the channel. I think it's going to do the same. It's going to slowly come down at the bottom of the channel and then go up to 194. Okay. So you either buy it at 171 and sell it at 194. I would say I'll hold on. I'll buy it around 150 and sell it at 194. That's your decision. I'm just drawing the technicals. That is your decision. Yeah. You might think that, I'm wrong. Yeah, I could be. I'm always wrong, right? So that's your decision, right? Zillow, not a bad name. Absolutely. House market is on fire all over the country. But look at this run. Holy moly. If you want to extend this all the way down here, and just play this mid channel that way, then there you go. The upper channel is 194. And this mid channel has been where it is now. I believe that if it reaches somehow to 180, that would be a, selling point. And if you want to extend it to lower like this, then that would be pretty much close to what I basically drew. Or you can take this, again, like I'm just showing you several different ways of playing around with the channels. I like this one the best. And I'll tell you the reason why. So pretty much the manual channel I drew, which is very close to it, it's probably going to get a support at the midline. That's why I said like I like this channel better. And worst case at the top of the cloud and then move higher and then higher. Okay. 194 is my ultimate target, but I just showed you ways to play around with it. I'd say that 61.8 and where the 9-day moving average right here, just zooming in, is a pretty good support. So if it comes down, that's an opportunity. If it comes down more, I'd hold off for that 50% Fibonacci. I'll rather go with the cloud top or the bottom of the channel and then move all the way up to 194 slowly. Okay. That's how I do technicals. You might think I'm wrong. That's fine. Give me a comment and I'll try to fix up things. Just to conclude things, as we mentioned the other day, markets are going to be volatile. I said expect volatility, expect 1% down, 1% up, 1 day down, 1 day up. And we didn't forget 1 day. It happened within 2 hours, 3 hours. So expect that volatility because the consumers think that we're topping out. They're scared. They're like, okay, we went up too much. I just made $1 million and I have no clue how to even play stock market. This is like a dream come true. So anything can happen. And then the market goes like 0.5% down and these people are freaked out and selling it. Now what happens is when the consumers or the retailers sell and affect the market, I mean, how much effect they'll have in the market, I don't know, but and then what happens to the institutional money? They're like, okay, you know, we're leveraged 10 times, 7 times. Now, your margin is only leveraged at 100%, give or take maximum 200. I don't know, depending on how much money you have and how long you've been in the company with. And their leverage is 7 to 10 times. So if they have 1 billion, they're able to buy 10 billion. Thin air money, this is a joke, guys. Our monetary system, the world's monetary system is a joke. Thin air money. A lot of people make fun of Bitcoin. What's the difference between Bitcoin and the money, the monetary system that we have now? We don't even have enough money that is printed against what the money that are being traded in the markets and, you know, in the real world. It's all imaginary, and I don't want to give a lesson of monetary, you know, institution, monetary system or capitalism, and I'm not a communist either. But it's just like you look and watch videos, YouTube, and you know, check out how the monetary system, the banking system, has been invented and who runs it and how it works. You'll get some ideas. Okay. Now, what I want to say right now is that we'll have volatility because the retail will just sell because they're scared they made so much money, and then it affects the institutions saying that, okay, we're leveraged, holy crap, let's go ahead and take some out. So instead of having a minus 0.20 day, you're having like a minus 1-2% day. And then the Fed goes and says, oh, don't freak out, you know, we're going to keep the market like this and blah, blah. So it's like a musical chair, and it's going to stop and it's going to crash, and it's going to be like 99, 2000. It's going to be like the 2009. And I don't think it's going to happen anytime soon. That big correction is going to happen when the economy gets fixed, when the things look great, when coronavirus is over, then you will see what will happen to the market. I am talking about pullbacks. People are misunderstanding corrections. Corrections are different from pullbacks. What we're seeing now is just a pullback. Correction, 10%, 20%, 30%. Okay. Pullbacks, 1% to 5%, 1% to 3% weekly. Okay. That's normal. So this pullback right here, right? Bam, it's just a motion, right? And then you go up, you go down, you go up, you go. These are pullbacks. This is healthy. You breathe in, out, right? Eventually, where you are right now, and what people are thinking is like, oh, I'm going to sell the top, buy the bottom. No. And let me see if I can pull out my Fidelity. I don't care if my account is like shown or something. Let me pull this thing. Let me do. I saw in Fidelity. I just transferred to Fidelity, by the way. I just put like $1,000 on the account to start, and just saw this cool thing about basket, and it's kind of cool. Let me sign in first. I think I'm logged out. I'm not promoting Fidelity. They're not paying me money to do this, so don't get me wrong. If you click trade, and there's something about, I'm sorry, let me pause the video and then find this and put it on the screen. All right, so I found it. I put it in my account. And so my account doesn't show or anything, so it's not private at this moment. So what it does is it allows you to do basket. So you put like stock names and then you put an amount. I just started this account. I opened it. This goddamn FUBO is not going up, so I can sell my shares from, or I can transfer my shares from Robinhood to Fidelity. Reason why is because I'm using margin, and then Robinhood is going to mess up the margin, and then I'm going to go in trouble for it. So what I'm waiting for is like maybe the 60s and the 74 levels, and I'll sell my margin and then just transfer the main account to Fidelity. I didn't like their system. It's kind of like weird, especially when you have margin. It's like every time I would click trade, there's margin and there's cash. Maybe it's more organized. I don't know. I just have to get used to it. Anyhow, you put your names here, like up to 50 stocks. You can put like all these stocks and basket it, and you can name your basket. So you can have several baskets. You can put the total amount in dollars or whatever, and then what happens is you'll save it. So what you want to do is like you can go ahead and say put $1,000 into biotech basket. Put $1,000 to financial fintech basket, like your Square and so forth, like PayPal and whatever, right? and put, you know, $1,000 to, you know, my, I don't know, ETF baskets, your ARK-K, ARK-G, SPY, FANG, FNGU, TQQQ, whatever, right? So that way, then you're not worried about, so these are the people that don't give a crap what happens to the market, because they're like, okay, I'm well balanced. I only put like, you know, 1K, I have like 80% cash. I give a, you know, a damn crap about market falling down. I'll put like 50K. The people who are worried, you know, day to day, second to second, they're checking level 2 every 5 seconds. We'll see what's going on. Oh, it dropped 1%. Oh, it dropped 2%. Oh, I'm dying. I have a heart attack. Those are the people who have, you know, $50,000 and they put their entire bank account, $50,000, to their trading account. They have zero money on their bank account. And then on top of it, they borrow $50,000 as a margin, and they put $100,000 into a very risky stock, like let's say, like, I don't know, whatever, right? I don't want to offend, like, I don't want to give stock names. And then they're like, oh, it went up 1%. Oh crap, I'm down, you know, 10K, I'm up 1K. Those are the people that are going to worry every day and not being able to sleep. So my best advice for you is start small if you're new in the game. Nobody gets rich fast. If they do, trust me, they'll lose it, not this month, not next month, but the end of the year, they'll be like, oh crap, I just lost $1 million. I made 1 million, I lost 1 million. That's what's gonna happen. Okay? You gotta take it safe. You gotta be, this is what my boss says, I respect him. He's in the software business, but he says, I don't care if the person is smart. You could be the smartest person alive and be lazy and don't do anything. Be consistent all the time. Consistency is what matters. Now, I promised to do the formula. Let me go find a formula and just tell you something. So I did some digging. I couldn't find it, but it's okay. I'll find that formula somehow. But like, consistent wins over time will always beat your short-term, you know, wins. Because the more you win, you're gonna risk, and then you're gonna take stupid risks and then lose it all. So short, you know, this is being a 2-hour video almost. I'm gonna have to have conclusion. Just be safe. Always be reasonable. Always have some cash on the side for pullbacks, and always invest in names, risky names, as much as you're willing to lose. And that's about it. I believe that the oil sector, the airlines, the cruises, seems like they're strong and on a cup and handle. It might, the double bottom, so they are confirmative on the next move higher. EV sector is stalling. I believe NEO is very strong compared to other names as the chart. Another conclusion I want to make is that these pharmaceutical crazy wins, the marijuana sector, the solar sector, is eventually going to die off. So be very careful and take your proceedings accordingly. Till then, see you guys tomorrow. Don't forget the sub, give us a like, and have a safe day.